I wouldn't expect anything major here in terms of a correction, maybe a 3 to 5% correction, to something to kind of bring you back towards those moving averages. Retest support would be a healthy pullback. Work off also some of this more extended kind of overbought condition. So again, markets on a relative strength basis are overbought. On a momentum basis, we're getting pretty extended. Prices are fairly deviated above moving averages. And again, there's nothing bearish about that. That's all very positive, but they can't stay that way forever. But let's talk about what you need to know before the bell this morning. Yesterday, the markets were kind of trading in negative territory for most of the day. Then right at the end of the day, had a bunch of institutions come in and buy up for the end of the quarter, and we actually finished the day positive. But on a short-term basis, again, the markets are, just functionally just a bit extended, and we've seen these before. Every time markets kind of get extended well above the kind of the running moving averages, etc., they tend to kind of stall, and then you get a bit of a correction, and then you kind of get the next advance. And we're kind of in that space right now. Markets are fairly well deviated from their 100-day moving average, as we've seen previously. And again, as we talked about before, is just when you get these kind of deviations from moving averages, they're like gravity. They kind of want to pull prices back at some point. Markets are very overbought. Now, we're not on a sell signal yet, but again, we're going to probably see one here sooner than later. I wouldn't surprise me over the next couple of weeks, particularly as we move into earnings season, get a little bit of sell-off, and particularly here, again, as we talked about before, right before the election, get a little bit of a correction. That'll kind of set markets up, for a rally into year end. Again, I wouldn't expect anything major here in terms of a correction, maybe a 3 to 5% correction, to something to kind of bring you back towards those moving averages. Retest support would be a healthy pullback. Work off also some of this more extended kind of overbought condition. So again, markets on a relative strength basis are overbought. On a momentum basis, we're getting pretty extended. Prices are fairly deviated above moving averages. And again, there's nothing bearish about that. That's all very positive, but they can't stay that way forever. So again, you're going to get some type of corrective action. I would kind of expect that over the next 30 days. That sets you up then for kind of that year-end rally, as there's going to be a lot of managers trying to play catch-up this year. They're behind in performance. They're going to have to play catch-up. And then more importantly, stock buybacks will return at the end of the month. But anyway, so just that's kind of the thing to kind of be looking at here in particular. Also, interest rates, as we talked about before, bond prices had gotten very, very extended. Kind of really across the board, and that is something that we talked about. It was kind of too late to buy a bond position at that point because things had gotten very extended, very overbought. This is interest rates, so this is the inverse of bond prices, but those have actually come up. We're starting to challenge the 50-day moving average from underneath. That's going to that's kind of working us into a position to where interest rates are now moving back up and overbought, meaning bonds are getting oversold finally. So we're likely going to get a little bit better setup here. Not just yet, but I would suspect maybe over the next month or so, particularly if we get a little bit of a correction in the markets, that we might get a little bit better setup here to add to bond positions. Now, last week we did start extending some of our duration. We moved a lot of our very short-term money, our 1 to 3 year kind of T-bill and chill money. We moved that to 3 to 5 year bills. So we've kind of started doing a little bit of shifting to add duration to the portfolio. But before we kind of make long duration bets, we needed this corrective process to occur that we're in. We talked about that previously, but now we're in the middle of that corrective process, and that may have a little bit more to go here. But that's what you need to know before the bell this morning.